Hello traders, hello investors, how are you doing today my friends? Welcome to another video here in the Finance Hydra channel. Let's see how SPY, the S&P ETF, is doing today. Today's reaction is quite good. Okay, it is quite good. It's going up 2.57%. That's great. It is a bullish candlestick. We are gapping up nicely. We have a few key points to talk about in this video, and I really believe it's going to be a very helpful video, so remember to click on the like button to support this channel. If you're new around here, subscribe, because our content is going to be very good, I promise you that. So let's see how SPY is doing today. Today, we see an amazing candlestick pattern. The day is not over yet, so we still could see a bearish reaction, and that's kind of expected. But this also explains why the volume is still a little bit low. I think the volume is going to play an important role in this reaction. If this volume here is going to be a decent volume, alright, it's another confirmation that the bullish bias over here will persist a little bit longer. However, we must wait for more signals in the 1 hour chart. However, before we continue, if you want to beat the market consistently with me, well, I invite you to join my trading newsletter over here, the Finance Hydra trading newsletter. We have been beating the S&P consistently. You may check my results over here. This trading log over here is public. Everybody has access to this trading log. You can see my performance every single week. This public document is going to be updated. So if you want to join us, if you want to beat the market with me, subscribe at my trading newsletter, my dear friends. So let's continue our analysis on SPY. In my humble opinion, in the 1 hour chart, the SPY ETF must close above $427. Okay, that's the most important key point on SPY, this green line over here. Why? Because if we close above this point, SPY is going to trigger a very nice bullish reversal chart pattern. Call it double bottom chart pattern. See, we see bottom, we see top, another bottom at a similar point that the previous bottom, and we are trying to break the peak between the two valleys down here. Okay, if we do close above this point, fantastic. Okay, probably we're gonna see more upside potential. That's great. And probably we're gonna fill this little gap over here. This gap is going to be our next technical target, $433.92. That's the next technical target if we trigger this double bottom chart pattern. Okay, the pattern was not officially triggered yet. I think we must close above the 427 today in order to actually trigger this pattern. But if we do, okay, potentially we're gonna fill this gap. We have another resistance level at $441 around this other green line over here. And let's not forget, we have two open gaps. One here, $446, and another one at $463. In my humble opinion, both gaps, I'm so sorry, all the three open gaps, the blue squares over here, they're all going to be filled in the short mid-term. However, we must wait for a better, proper bullish reaction. Okay, this double bottom chart pattern is a very good reaction indeed. But it is not enough right now, because to me, we must close above $427 when we analyze the weekly chart. The weekly chart looks okay. It is not, it is still a bull trend, but we don't see crystal clear bearish reversal. We don't see crystal clear lower high, lower low, but we see that the S&P, the SPY ETF is struggling a lot in this area. I like the fact it is doing long shadows under the candlestick's bodies. This indicates to us, guys, every single candlestick over here tells us a story, a different story. Every single candlestick, it is a battle between bulls and bears. And when we see this going on, what this indicates to us? It tells us that the bears were winning the fight. They did a very competent job. They made the ETF drop sharply over here. However, the bulls' reaction was even stronger, and we managed to close in green bullish territory, leaving this huge scar on the bear's face down here. So every single huge shadow that we see down here is quite meaningful, okay? It is indicating to us that the sell pressure is exhausted in so many levels, and it is indicating to us that we see people buying in this area. There are people buying here, okay? The smart money always try to buy when people are panicking, when retail traders are panicking, when people believe the market will crash. That's the moment when we see the smart money getting in. So yeah, we have to be extremely careful right now on the S&P. In my humble opinion, at least it is going to fill this gap at $433. Why? Because this gap is quite close to the 21 EMA in the daily chart, $434. So this point is going to be a dual resistance level for SPY. Then we'll see how to proceed. Okay, if we see another bullish structure, great. Probably SPY is going to recover, probably it's going to fill these two gaps over here, that's great. But right now, I think the SPY deserves to do a better reaction, more convincing one. I don't believe it is worth to short right now at this moment, unless if you shorted up here near the $500, okay, that's valid. But right now it's too damn late, okay? I don't think it is a plausible moment to short. I only think it is a very nice opportunity to buy, and it does look like it is an opportunity to buy. Let's see how the smart money will behave. I will keep you guys updated on the charts over here. So again, remember to subscribe to this channel, remember to click on the like button, and stay safe, my friends. Farewell.